And I also want to do a special focus on NBFC. So while banks of all the while have knew about regulations and all, NBFCs were slightly not touched as deeply. And there was always that I can do X and NBFC can do Y. X, Y, the arbitrage levels were fairly high. I mean, even now we hear about video KYC getting done by banks. When it comes to NBFCs, there's always a need. Can we do CKYC? Can we do CKYC? I think, but the fact of the matter is regulations are clear. Everybody is moving towards video KYC. That's was the preferred method of operating as well. So yeah, what is happening in last few years? I think data has come at a rapid pace. The products are getting digitized. So many of the products like a PL are largely digitized right now. The focus right now is to get into maybe business loans. Focus right now is to get into maybe secure loans. And of course, payment and all anyway is digitized. The API usage is heavy, and some of the APIs are coming from the ecosystem, which is on cloud, some of your own internal systems, and maybe something from some other agencies as well. So I think there is a source of data from which it's coming is very many, right? It's not like very few. So if you're storing your data, what kind of controls you have, all that is coming. Now, when you do bank and fintech partnerships, now RBI is clear as part of DLG guidelines. What is the control point bank should have or NBFC should have? What is the control point fintechs have? And fintechs, for all the while, when they did not have too many regulations, they are now almost under the full regulation as well. Maybe not be directly, but indirectly. So banks have to ensure that they cater to all the controls and they ensure that the partners, all the partners, 5, 10, whatever it is, take care of it as well. Innovations are also coming at a rapid pace. Today, you may not have done a secure lending digitization. But if you were to do, how do you manage it? How do you control it? How do you ensure it is done in a very, very detailed and clear way? So, and then of course, digital banking new platforms are coming. So when you use those platforms, how do you manage it? How do you control it? All of that. Yeah. So I think this is what is changing. Now, just generically at a thought process perspective, KYC was not digital earlier. I'm talking about 2020 before. Of course, 2016 regulations came, but movement was limited. Before COVID, I think digital was still very little in the banking and NBFC parlance. We have always had largely a DSA-led account opening, even lending. And you have to realize from one factor that today you may say even before 2020, digital was happening on the credit side, but not really. Percentage of loans digitized were like less than maybe 1%, maybe less. But today, the PL side, the mass is actually digital right now. So the movement has been heavy. And therefore, you see RBI talking about slowing down, making more controls and all of that. KYC was not digital. So therefore, everything was documented. Therefore, it was prone to errors and very difficult to audit. Now it's fully digital. You really can't make mistake that papers are in branches. You can get away with some regulation or saying we didn't see it. But today it's digital. It can be audited. So therefore, when RBI comes and audits, it's different now. And of course, banks or SFBs are deeply regulated now. The intention is much more. Today, any NBFC who's obviously in upper layer is actually just exactly at the bank level. So it's tough. And of course, all the guys who are middle layer, especially those who have just turned into 1,000 crore bottleneck, they've just crossed that. They are under severe stress because they've not been introduced to a IT strategy committee and all the frameworks which are common IT governance. They are still working in a slightly loose way. And anybody who's in a base layer just about to enter into the middle layer, the kind of preparation they have to do is amazingly high. So I think the risk levels are that you transition from left to right, but your control points are not there and you just fall off. So I think very, very crucial of all the entities who are in this layer, middle layer, anybody who's an upper would always be working on a bank grade. So I'm not worried on that. So if you're large, you have 1,000, maybe a lakh or 2 lakh crore portfolio. By now you have already got that gist of it and RBI has been very clear about it. But those who are in middle layer, specifically those who have just got in or maybe just grown to 2,000, 3,000 crore portfolio may not be actually ready for all the changes they're expected. And those below 1,000, maybe they're in 600 crores. And they're expected to transition to with so much of growth in the market, they may transition to a mid layer maybe next year or next to next year. They need to prep now. They can't do much once they reach there because there's a lot of work to be done. And therefore, what we are talking about KYC's regulations, lending has been, of course, DLG and FLDG frameworks are already there. And even PAPG regulations are already there. Number of entities in the structures are very, very large now. I think the critical part is RBI mandates cannot be ignored. I think you need to ensure that your RBI is trying to to control, fortify lending segment, and you need to support for it. They will guide and they will also check. I think my request is, a lot of people say, मेरे पास को भी checking हुआ ही नहीं है, this is too early, maybe we are too small, nobody will come to it. I think that life is over. They are now going to NBFC as well and auditing. They are even go to P2P lending and they are auditing. So control points are very, very heavy. And also, please do not read between the lines. No means no. Yes means no, yes. And if it is not written, it is still no. So 2 years back, 3 years back, my response would have been different. But no means no. If nothing is written, it is also means no. So nothing is written between the lines. Do not overinterpret because you want to get a business up and saying, I, in the name of innovation, I want to do something. Please don't do. I think it is really, really dangerous. I think you have heard about it. I'm trying to avoid names here, but I think every entity out here in a bank, NBFC, a fintech, large bank, largest of the banks, everybody has been under the radar. It can be that I am PSU. Can I get that lever? Am I this? Can I get this lever? Not really. Nobody has got any lever till date. Not a single guy has got any support right now. So if you make mistake, you sort of make mistakes. So please, please, please do not get into that thought process. Can I get away with it? You can't get away with this problem at all. Okay. And of course, those who are in fintech segment, they think that I can get away and all the control points are still with the bank. Not really, not at all. RBI has been clear. They have been chasing. They are figuring out through partnerships with the banks. They can even reach out to fintechs and talk about it. So they are actually talking to fintechs as well. So you may be a small fintech saying, I may not be touched. Boss, you be ready. They have the arms and the controls. They will come and ask you. So please be aware that any of these things, because I'm also saying this because when we are building embedded finance with so many banks, so many fintechs, or we are on the bank side or fintech side, I keep hearing this argument, यार कोशिश करके देख लेते क्या फर्क पड़ता है, कोशिश करके देखते क्या फर्क पड़ता है, पकड़े जाएंगे तो देखेंगे. I think let's not do it. I think enough is enough. I just don't want to have a scenario where we are haunted for it forever. It's just not possible, right? Now, how each thing is moving, I think just a summary. I'll just give me a minute. I will just come to you. I'll just come to you. And now what is happening is we always had an India stack, right? Certification is happening. We have data coming from all APIs, from eSign to DigiLocker to all of them. On the other side, you and the account aggregator, everybody must be using, which is very, very crucial. So it's not that you should not be using it. Stack is available to you. Government has opened the India stack completely to you. Aadhaar is available to you, and you can actually do KYC. So generically, from a government and regulator perspective, support of digital is extreme. There also GST is also digitized. You can also have ONDC framework coming. So there are so many frameworks exist today, but everything has to be used in a very, very sort of accurate way. Galti se bhi galti nahi karne ka, because the government will be after your blood. Latish, I'll come back and take your question in a minute. Yeah. So earlier, if you look at RBI was very deeply into only banks. Now they're talking banks, upper layer, middle layer. Base layer obviously is still not very tough right now, but anybody transition from here to here has to be careful. PAPG very clear, P2P lending very, very clear. Fintechs and technically SROs which will get created will also come under some scrutiny because they will be expected to behave in a particular way as well. First thing first, IT governance regulation came, and to be honest, I think any one of you who actually does regulation and you are in business, please read artifacts. Okay, these artifacts which are coming from RBI are not meant for compliance team at all. They're also meant for business guys. They're also meant for technology guys. They're also meant for anybody in the operation side. Please read through the document. If you don't have understanding of it, please spend that time. The regulations are very clear. Earlier, when IT governance regulation came, they were like which committee? Governance committee was there, right? So governance committee document was large, hundreds of pages, which is where Shashank was helpful to me. But today, these documents are very concise, very clear. So they talk about compliances. They talk about there should be a strategy for it. There should be a security compliance policy for this. There should be audit process for it. There should be a team responsible for it. They want a board to be responsible. So IT committee of the board is actually responsible for all these controls. They're supposed to know about it and then CEO as well as the steering committee, which the all the business head and technically always the IT head will be there, should be accountable and should be presenting on a quarterly basis. All the structures like that, including ensuring that from a security policy perspective, what policy, what controls, who should report to whom. For example, in many companies, the CISO may not be reporting in a way to only CIO. That's also not permitted at all. So please look at the document. This is maybe not very large document, but word by word, if you go, you will realize that what all compliances. For example, many of these companies may have sister concerns who are working on it. They are not group companies, but a related party entities. That's also not permitted. So a lot of controls are given out there. Please ensure that you take care of it. And it is also relevant for NBFC as well. So the idea is to ensure that static alignment of technology should be there. There should be technical IT strategy. There should be a value delivery, risk management, compliance, and resource management, what kind of resource, performance, KPIs, and very, very critically, the BCPDR process. They are talking about business impact analysis. What kind of business impact analysis should be there? So all of that is documented, structured, available out there. IT outsourcing. So another policy which was clearly documented recently. Earlier, the most of the work was done in-house. You will put a core banking within your infrastructure. You will do maybe payment processor, maybe an NEFT, RTs, all in within your environment. Now, with the scale, you may be going to cloud. You may be actually outsourcing maybe the entire switches outside, which a cloud switch and all. You may be outsourcing the APIs to somebody else. You may be working and ensuring that data is actually accessed on the platform, and there you run some algorithms and you get the AML related data back. All of that you can do, right? So the power is there. But RBI is also clear that how you should audit, how you should control, what kind of capability you need to build around that, risk-based approach, how you should put it, qualitative, quantitative. I think aspects out there on outsourcing are very detailed. You have to be able to segregate. For example, what if your outsourced partner actually is mixing data? What if he's mixing data and your data and third-party data is together? No, you may say, "Nahi, mera partner aisa nahi karta." I think nonsense. Please go and check. It's very, very crucial we go ahead and check, because those kind of commingling of data is possible. So a lot of times earlier, the partner will say, no, you can't audit. This is how I globally I work. Today it's not possible. You need to have a partner who can auditable. In fact, to the extent there's also a policy that can you have an exit policy as well. So when you partner with someone, there should also be exit policy saying that if you were to exit, let's say you work on a particular cloud, if you were to exit, what is the process around that? What is the cost around that? If you work with a particular core banking, you need to have a path for exiting. Because I will be honest that when you enter, you don't think about those paths. But when you exit, you are crying, right? Because if your, let's say, core banking is crashing and you have to replace your core banking guy does not give you the access to data, you're dead anyway, right? So you need to ensure that your agreements have all those details. If you're not, you have to get it done now. Where's the data stored? Within India, outside India? Within the data, is anybody having access to that data at all? I think you need to put all the processes. Don't get away naively saying, "Mujhe pata nahi tha." And then also DPDPA as well has come. So I think I'll not bore you with DPDPA, because I think some sessions will talk about it more, much more detailed. They're much more better expert than me. But DPDPA has already come, right? So technically, there is a data protection has to be done from the data perspective. Data which you have, let's say, for example, you may have tons of data. A lot of bankers would have buy Excels and just transition case को use करके underwrite कर लेते हैं, कुछ तो करते हैं. There's a lot of what do you say? We do bureau scrub कर लेते हैं. Bureau scrub तो कर लेते हैं, आपको data आया कहाँ से? Did the customer tell you that you should scrub my data? So all those control points will be very tricky to manage. So I think there's a clarity there's a lot of impact which will happen on the organization. Technology side, a lot of implication and impact out there, including intelligent APIs and all. Even your product designs, you have to be careful on how you are doing a data fetch, how you are doing autofill, how you are doing cross-sell. Is cross-sell possible or not? Are you sharing, as part of cross-sell, are you sharing the customer data in one way or other to some partner and then getting the scrub back, something like that? And of course, operation risk management also will come under radar. I think the critical point is, if you look at all the regulation and all the controls point in being there should be IT industry best practices. Then there are DLGF, DLDG, IT governance, IT data security, DPDPA, IT outsourcing guidelines, DPSC, KYC guidelines, a bunch of guidelines on one side. And then there is a series of compliance you have to do. You have to be, let's say, ISO 27000 compliant. You will have to have maybe a PCI DSS compliant because you are there. SOC 2 compliance, COVID 2. There will be tons of requirement on both sides, and you would want to ensure that you are compliant on all. Now, for all of that to happen, you need to have some framework to ensure that you are complying with all. नहीं तो एक के लिए separately complying is very expensive, very cost ineffective, and then who controls what, right? And then you do one ISO, and then you realize, oh shit, when I go for IT governance, there's 10 more things to be done, right? So there's a overall cost of compliance will go up. And every time there's a checklist have to be replicated as well. So this ka checklist alag, uska response alag. The moment you do X, the Y will come in. So what we have been thinking about, this is our compliance framework. We are trying to say that, can we ensure that we have one framework by which all the regulatory requirements, compliance standards and protocols, industry best practices are all put into one structure. So that you end up with this structure, which is that all the benefits. Okay, so what should happen is you should have a single framework. We should talk about change management, incident management, audit management, capacity management. Capacity management will be on one side in let's say in governance, IT governance. It may also be there in some of the standards as well. So ensure that all of those frameworks are built in one process. Ensure that your policy management is common, your risk management framework is common, governance is common. So you put this framework in. Now, the moment you put all the framework in, which is coming from obviously all regulations and all standards, you will have a composite one framework which you can actually leverage and move ahead. In that, obviously, you can actually put all the control points together. It'll become like a composite structure, one after another. It will have one composite structure, and all the guidelines are actually baked in. So logically, what should happen is that your risk management will improve, your regulatory compliance will dramatically move up. And I'll be honest that whatever period I have been fortunate to work with Shashank, and we have that experience. We never had the compliance issues, right? So I think just being aware, capacity management upfront, ensure that the IT security policies are taken care of and updated. We go for approval for board all the time. So all the control points we put, it becomes much easier. Transparency, visibility. Why should I have to hide from regulator that this is like I'm not doing, but I have to tell them that we'll do it? Put it upfront. You as long as you tell the regulator that by when you will do that activity and you actually execute on that day, I think regulator has been very fine with it. I've seen it all the time. Improve decision making, because when you go for approval for new frameworks, new let's say investment to be done, you are clear. This is the only investment we have to do in this framework. This outsourcing policy goes through all these controls. So that if it's on board, we are done with it. Scalability and adaptability, because scalability becomes an issue as well. Let's say a lot of people are now saying that if I have to go 10x, how do you control? So again, that scalability process also comes both in IT outsourcing as well as in your governance structure as well. So all of that will be a critical part. And of course, BCP-DR, we have seen enough of DR issues happening in many banks where the digital platforms go off. And you just remember, NBFC may also have the same scenario where their digital platforms on which they're servicing the customer may go off. And what happens when RBI comes and start hitting them? Today, they are not hitting them directly right now because banks have been on that radar. But what if they go through this same chaos for service availability? Let's say what is the mobile platform of NBFCs go down and RBI asks them not to onboard any more lender. It's any more customers, so it will be dangerous. I think this is a framework, maybe the detail which Shashank will talk about. How do you ensure that we map all the regulatory frameworks in one process? We do all the compliance frameworks as well. Then we do risk-based prioritization so that we have action items coming in one structure. नहीं तो क्या होगा, बहुत सारी चीजें एक साथ आ जाएंगी. Tons of action item in one structure, and you're like lost. So you prioritize what needs to be done upfront, and what you have to tell even the regulator will happen in later stage, and you actually execute against it. Then continuous monitoring and update. And of course, critical part is that whenever you do compliance, business guys will say, "Yeah, zarurat nahi. We need to train them as well. What is happening to one bank can happen to your bank. One NBFC can happen to your NBFC as well. So I think the last thing you want to do is like sort of make wrong mistakes, wrong activities. It can result in derailment of your whole digital processes. It can be an issue where your business partner actually uses your data and data is leaked somewhere. There can also be data privacy issues. There can be impact to be done to saying whenever you do cloud, do you control it? Tomorrow cloud with kuch issue will you be adversely impacted? You also have to ensure that when you do the front end journeys, is the data which is happening in back end, is there an issue with the back end processes as well? And of course, all of that should result in better customer sort of engagement and maybe retention as well, because they trust your bank more than others. So I think this is largely the framework we are talking about. We need to have IT governance focus. we need to have a tools and technology to run it. We need to create a uniform sort of a framework for running it. And of course, ensure that we are benchmarked not just to the country, but to the world. But with this, I pause now. Maybe I'll take some questions and if I can't, of course, if I can't, I have Shashank with me and he will pick it up. But I'll open up for maybe the to some questions which I have got here. Just one sec. Let me see if I can read. Is there a regulation specific to fintech who are doing partnership with banks? So look, for specifically for lending side, we have clearly a DLG guidelines which exist today and which are getting enriched more and more. So lending side guidelines are very, very clear. On the payment side, anyway, PAPG guidelines are already available, so you can pick them up as well. Anupam is asking that can we get PPT to the session? We will give you a feedback session. We'll not randomly pump everybody's email and with our decks, but some components we'll definitely share across to you. If you give a feedback to us. So my request to Sakshi, please share the link where they can actually give a feedback. You can give now or later, but you can pick up all those who are interested in getting that. We will do that. Can you share some more light on ADI guidelines on various stacks like QIC? So I think, Latish, we are right now, specifically, we're not going to exact regulation right now in this session. We are going into some frameworks and some processes, but Latish, we can take it offline and we can actually work on it. Then there's an anonymous attendee who said that we applied for regulatory sandbox in the section where we sought regulation. What is the right approach to presenting the case, considering the scope of master direction previously rolled out? I think, again, to your point, I think regulators is happy to take those pointers. Right now, my understanding is there's open framework where they are willing to take more of your new ideas there as well. So it's right now not, earlier it used to be payment and this, and now it's much more open. But again, we'll take it offline. This is not the forum for it. Maybe Sakshi, you can take the question back, and maybe if you can share your name, we'll pick it up. Then there's a question coming from Urvi. How does the company manage regulatory framework and submission if there is a services which are falling under specific, some which are not? I think some technically everything will be under regulatory framework, right? So when you're producing something as a bank, it will be. But let's say if you're a fintech, if you're maybe you're an embedded finance player, maybe you have accounting platform and some part of is accounting and some is lending. You need to be able to segregate those entities, right? So my request to you, and this is what we do with most of our clients, is that we try to ensure that we have separate entities are created. One which is under a fintech or a regulatory framework entity, and second is maybe embedded finance entity, which continues to run separately. You can actually do an enablement on the platform so that the customer gets to understand that this service is coming from another, powered by another entity, and you get that service from that entity. But at no point of time you should try to mix it, because then when the audit comes, it may get very, very difficult to you, right? Very, very difficult. So that's the question I wanted to give answer to. Yeah, I'll pause now. Maybe more questions we'll take later. As usual, Shashank, I may have breached my brief by around maybe 5 to 7 minutes. Back to you. Thank you guys for being there, and we'll continue to take your questions. My team will continue to respond back to you, and I hope during the day we'll get to learn new stuff, and with so many big speakers coming in and sort of teaching us as well. So over to you, back to you, Shashank.